Hello, traders, and welcome back to another day of trading with the team. Let's have a look at the US dollar pre non-farm payrolls. We do have non-farm payrolls in an hour and a half. So let's have a look at the forecasted numbers. It's forecasted that the US economy added 553,000 jobs last month. Average hourly earnings are forecasted to remain the same. And the unemployment rate in the US is forecasted to drop by 0.1%. So everything looks very good. And but remember that these are just forecasts. We are not going to front run this massive high impact event. Now, let's have a look at the USD, right? I've been telling you all week long that anything above the 95.70 level is bullish to me, right? We are in a big, at least immediate bullish market in the USD, right from the lows in May 25th to the highs on November 25th. To the USD has appreciated or has rallied about 8 or exactly 8.25%. So we're still looking for longs on the US dollar, right? What I like about the USD on the long side at the moment is this. Let me show you the daily chart. Actually, I'm going to show you maybe the 4-day chart can, yeah, the 4-day chart should do. What I like about where price action is trading at the moment, or where price is trading at the moment on the DXY, is that we are above this previous base, right? This previous big base in the DXY, this is the level that buyers were protecting before well, eventually price broke to the downside, right? Now we are above this historic key level, but we do have non-farm payrolls today. So again, we are not going to front run this event. But if everything, I mean, if numbers come out as expected, I'm going to look for US dollar longs, of course, after the release. Um, paying attention to this no trade range. So basically, what I'm looking at um, after the release of this employment data out of the US is a break of these highs and the previous lows, of course. So a break above the 96.40 level. That's what I'm looking for. Remember that we did have this fake out on November 30th. And what I'm looking at is a real breakout, retest, and then here's where I will be looking for buys on the US dollar. That, of course, is only if the data comes out as expected. Now, if employment numbers miss expectations. I really don't have a plan on the short side, right? I do not have a plan on the short side. I will let that go. Because and the reason is because yeah, I mean if job numbers miss in, today in about 90 minutes, the US dollar is going to break with this structure that it's traded in. But you know what? That could only be momentum driven due to the miss on that economic data or job numbers, right? What I would be looking at if that scenario plays out is possible longs at the 95.55, but that would be a little too risky in my opinion. Now, on the equity side, right? Yesterday I was looking at possible shorts on the Dow. I told you guys that pre-market shorts were crazy risky, and normally price just takes out weak shorts, weak players. before really retesting the previous broken lows or the previous broken levels, right? Now, um, I was looking for that, but after looking at that hourly close, I decided not to get involved in this market. Um, if job numbers um, beat expectations, we are going to get a rally in equities, of course, right? My preferred market, actually, yeah, my preferred market to look for the longs would be the Nasdaq, and the main reason is this, right? Because the Nasdaq has yet to really retest my power buy zone. After that ABC power buy a couple of months ago, right? Yeah, I mean this was at the beginning of October. Price hasn't really retested these highs, and I'm talking about the 15,700 level or September highs. So what I would be looking at during the release on previous is a dip towards this level. To take, I mean, price eventually will take out weak players that are front running this event, and a dip towards this level will give me a nice risk to reward ratio for a buy on the Nasdaq. And the reason that this is my preferred market on to go long on on U.S. equities is because of this, right? The setup is very clear, not like the S&P 500 that, well, the S&P 500 actually has retested and rejected that power by zone 2, but I mean, price action on the past couple of days just has been really non-directional in this market, and it's looking very bearish on the lower time frames. Now, on the Dow, same thing. On the Dow, it's even worse because the real power buy zone that I see here is the lows at around the 33.7, 33.8, let's call it 33.800 level, right? Or these previous lows where we have seen buyers jumping in relentlessly in the past. So I will be looking for that dip on the Nasdaq. So let's have a look on the hourly and yeah, let's have a look on the hourly. So what I would be looking at on the hourly is a retest of these highs, right? Around the 15,700 level, like I told you. And because right now there is absolutely no setup, right? So if price just breaks with today's highs and yesterday's highs, well, I won't be getting involved. But if we get that dip prior to the release of the job numbers out of the U.S. Before the big rally, that is only if job numbers beat expectations, right? That would be the place where I would look for buys. So I'm going to be live today for the non-farm payrolls release. And yeah, I will be looking for those two scenarios on my show. So heads up to that. Join us on this YouTube channel.